Good morning, Bear Bull community. Going to submit a quick recap today here on JD. I'll try to keep it within the confines of the time limits that Andrew et al. Have prescribed for us when it comes to submitting these recaps. I did trade some other stuff. Obviously, you can see it in here. I think JD was one of the most obvious trades, and that's why I'm going to recap that. For those of you who don't know me, my name is Daniel Thomas. I read Andrew's book a couple years ago. When he was Vancouver Traders was the name of his chat community back then. I joined and I've been a member ever since. And so this is going to be my first video recap submission to the Bear Bull community. I did have a YouTube channel. I've actually had two YouTube channels. I deleted both of them. Deleted the first one about 6 months ago. For a variety of reasons. I brought it back a couple months ago, and then I remembered what the reasons for me deleting it the first time were. And so, I have reasons, but I don't want to get into those, and I don't want to waste time on that today. But I do enjoy helping. I do enjoy doing recaps, and so this will be my preferred venue for recapping and or answering any questions going forward. If you see me in chat, feel free to reach out and say what's up. Send me a message in the forums. But again, I do not have a YouTube channel anymore, and I have no plans on bringing it back. So if you want to get a hold of me, you got to go through Bear Bull for now. So or shoot me an email. Andrew has my email if you want to get a hold of me. So anyway, JD here. So Andrew will tell you, one of the things about me as a trader is, when I read Andrew's book, he was really the first day trading book that I had read. I had read a variety of books. I think I read 30 books by the time I got to his book. But he was really the person that kind of catapulted me into the world of day trading. Prior to that, if you could even say I was a swing trader. I kind of tried to swing trade from time to time, but I wouldn't even have classified myself as a swing trader. So when I first started trading, I held very steadfast to many of the rules that Andrew kind of prescribes for us. Don't pre-market trade. Wait for about 5 minutes. I play the same sorts of stocks that he plays, and over time I've kind of but I've evolved into my own trading personality. And Andrew will tell you that, and I think that it's just one of those things that all traders, I think, have a different set of a different skill set, a different set of strengths and weaknesses. And I really believe, even though this isn't the purpose of the video, I really believe that if you have a solid foundation, which you can get from Andrew over at Bear Bull Traders, Andrew and crew, I believe that once you have that foundation, you can start kind of branching off and adding certain skill sets or certain skills to your skill set to make you a more better rounded trader. I think a lot of traders, they try to trade by one strict set of rules, and I think that sometimes their personality doesn't necessarily match those set of rules 100%. And so my advice on that with regard to that topic would be jump on board with Andrew, for example, and use the foundation that he's provided you. And then if you feel like your personality wants to kind of go a different direction for maybe 5% or 10% of your trading, don't be afraid to do it, but understand that the rules that Andrew has established for himself as, in my opinion, one of the best traders in the world, they work. And so use those as a foundation. So I say all of that as I got off topic there to talk about, I do trade pre-market every single day. Every day, it's just one of the things about my personality that has made me a different trader, and it's helped me evolve as a trader. And so, in the pre-market here on JD, there was a pre-market high. I've identified these lines within my platform. I identify the pre-market high and the pre-market low within my price marker settings. And so the pre-market high was here this morning. It looks like at about 7:15. And so the goal initially was to wait for it to double top, right? To wait for it to kind of double top and find its way back up to the pre-market high. oftentimes they'll do that, right? And the way I like to trade is I'll take a trade right underneath that pre-market high so that my risk to the pre-market high is null, right? Is very, very minimal. Now, I will say that in the pre-market, sometimes if the volume's not great, or even if the volume is great, sometimes you can push right through this and go straight up, and that can cost you some money. And so it's one of those things that if you're going to trade the pre-market and do something similar to what I'm describing here, I would do it in simulation, 1,000 times before you do it for real, just so you can kind of get a good feel for what's going on. So anyway, so the pre-market high was there. The goal for me was to get back in near the pre-market high. And you can see I kind of did that in here. And that was actually in the pre-market. But I jumped in, a little bit of FOMO going on before it came back up. So I jumped in right there, took a short. It looked like we were losing VWAP at that point. I'll zoom in on that so you can kind of see that. So it looked like we were losing VWAP at that point. We had put in a high here, potentially a shoulder and a shoulder in this vicinity. Looked like we were losing VWAP, so I went ahead and shorted it. This 50 moving average, it can be a very supportive moving average on the way down, so I was a little bit reserved or hesitant to take the position because of it, but I did take the short there. We did lose VWAP, and I ended up covering the position because the 100 moving average I thought would be supportive in the way. I also thought that if you take this consolidation area over here, so we kind of popped and we consolidated in here, right? If you were to take this consolidation area and project it out to the future, that would oftentimes that will prove to be a consolidation area in space in the future. And so this consolidation area here was another reason for me covering the position there. So anyway, there was the first trade. The next trade that I took was as it bounced, as it came back up on the day. Oftentimes these things, when they start putting in these what we call bull flags, you can see one there and you can see another one there. Oftentimes they'll put in two of them. So here's one, here's two before they decide to roll over. Now I will tell you that when I took this position in here, this short, I was a little bit on the fence about it. I thought it could roll over because of the two flag concept, but I also had my eye on the pre-market high as a potential area that we could get to. So my risk on this, I didn't really have a risk to, though I thought it could come to the pre-market high and X would be my risk, I wasn't willing to hold it through X because my reward was only about X, right? So that's about a 1-to-1, and I want better than 1-to-1. Andrew taught me better than that, right? So anyway, I took the short in here. I ended up realizing that it was going to pop, so I got out. A little bit of FOMO going on. I thought that we may be rolling over at this point in time, so I decided to go ahead and jump back in right there. Took another short, realized that FOMO was the reason for that trade, so I got back out. And then this very next candle in here, it gave us a lot of volatility. It did one of these things where if this was the top and the bottom of the candle, it was kind of doing this the entire minute, right? It was kind of doing this the entire minute. And when I see volatility, I tend to think that volatility is a sign of a reversal. And so since we were on our way up, the volatility, obviously, if it's a sign of a reversal, would be an indication that we may be coming back down, right? And so I took the short there. I took the short right in here, and that was my entry. I'm a person that likes to scale into trades, so when I take a trade there, for example, the first thing I do is look at my risk. And my risk, right, you probably guessed it already, is X, right? It's to the pre-market high, was where I was willing to go with this trade. And my reward was 1-to-1 to VWAP, but I was really aiming for this area down here. And so that gives me about 2, maybe 2.5 to 1. So 2.5 on the reward side of things, 1 on the risk side of things. And so I mentioned that I'm the kind of person that likes to scale in. And so if my risk is here at the pre-market high, for example, and my entry is here, anything that I can take between that entry and my risk just gives me a better average. There's a difference, I think, between averaging up, which this is technically, I guess from a literal sense, that's what I'm doing in here, is I'm averaging up. But I don't look at it as averaging up because I'm not just averaging up into an area of no return, right? I'm not just averaging up for the sake of averaging up. I'm actually averaging into my risk, right? I'm averaging into my risk. So my position, oftentimes what I'll do, just to make the point clear, is if my first position is here, but I think that we may come up here, I'll take a small position down here, maybe 150 shares, right? And this is, maybe I want 1,000 shares on this, but I'll take 150 shares, right, just in case it does roll over at that point in time, under the premise that if it does come up, maybe I'll take another 200 shares as we get a little bit higher, right? And so now I'm closer to my 1,000 shares, right? And then and then maybe as it's going up, I'm looking over here. I'm actually in a position now. Looks like it's trying to pop on me. And then as it continues its way up, maybe as we get even closer to the pre-market high, as I mentioned, maybe I want 1,000 shares. Maybe I'll short 750 shares up here, right? Maybe I'll do that. And so that's kind of the way I trade, right? So it's a way for me to satisfy FOMO, right? Because I want in here because it may roll over without me, but at the same time I understand that there is a risk involved, a bigger risk than I want to take on. And again, the closer we get to that risk, the more comfortable I am with taking the trade. And that is not something that Andrew's going to teach you. It's just something that I've kind of developed over time. But the risk-reward metrics of 2 to 1 or greater are something that he will definitely preach to you and tell you that is almost mandatory when it comes to finding a trade. So anyway, so the pre-market high was my risk on this. I did violate Andrew's rule. He does not like holding positions from he doesn't even take pre-market positions. So I violated that rule. But one of my rules that I've developed over time is not to take a position from the pre-market into the market. And I did violate that here. And the reason I violated that, sometimes I will violate that rule, is because as I watch it pop on me, is because I know where my risk is. My risk is here. And as long as we don't breach that at the open, I'm fine. Now, I will tell you sometimes if we breach it very, very violently, right? And so, we can kind of hover around this area and then just spike straight up. And that's one of the reasons I don't like taking positions from the pre-market into the market. But I will do it on occasion, especially if we're showing a telltale sign that we may be double topping, right? And so that's why I did that. That's why I was willing to do it today. I scaled out a little bit on the way down because of VWAP. So VWAP is a very supportive area. I scaled out a little bit there, and I waited. I waited for the second minute to kind of finish its consolidation. I realized there was a good chance we would drop, right, and come to this area like I talked about. And so I re-shorted there. I covered some at the 100 moving average. That first 5-minute period of the day is very volatile sometimes, right? And so I like to scalp in that first 5 minutes. And I would actually, agree with Andrew 100% that it's probably safer to stay away from the first 5 minutes altogether. But Andrew's a much better trader than I am, and so I make dumb decisions like this sometimes. But I just wanted to give my rationale for doing it, right? So shorted some as the consolidation ended. Covered a little bit at the 100, covered a little bit more at the 200, and now we're kind of in the fundamentals of what Andrew will teach you as a trader. You wait for 5 minutes. There's 1, 2, 3, 4. Here's your 5th minute you're waiting for. So now, as a foundation that Andrew's provided you guys, we're kind of waiting for maybe a pullback if we think it's coming down at this point, and you're going to get in at or around that 5-minute mark, right? And so in here you can see that for me, again, 1, 2, right, 3, 4, and 5 minutes, I'm waiting for a pullback. I'm waiting for this thing came down. I'm waiting for it to pull back. And the closer I can get in to VWAP, right, because VWAP should be overhead resistance, the better. And so what I did in here is I kind of just waited. This candle was bouncing up and down. I decided that the 200 moving average may be resistance here, and so I'm going to just take the position now. And so I did. I took the position. Just shortly thereafter, it looks like I covered the position. Don't quite remember doing it, but maybe I kind of, I'm looking to the left here. It looks like it was just a scalp for me. So in, right, and out. And again, it's because of this consolidation in the pre-market that if I were to scroll back even more, you would see even more of that, right? So here we go, right? So consolidation, right? And then I'm out in here because of that consolidation, right? So now I'm basically done on the day. I have some other trades that I've traded, but I'm done with JD on the day unless it gives us a really good pullback. I did think, and I'll show you why based on the day chart, I did think it would come down. So you can see once we started rolling over here, we tapped VWAP. I shorted some, same concept, right? Risk to VWAP is X. The closer we can get into that risk, the better for a short. And I think that's the position I'm playing now. I think, if I'm not mistaken, yeah, so that's 1,000 shares. So that is 1,000 shares. If I were to bring up my trade log real quick, sorry, Andrew and guys, I know this is the longer one, but hopefully you guys are okay with it kind of going over on the time limits. If I bring this thing up here, you can see if I kind of put my trades in descending order or you know in order based on time. If I go to the very bottom here, you can see there's 1,000 shares shorted. So it looks like I had a position on FGen, but you can see there's probably about 500 there, and then about 500 or so there, something like that. I do the math on it, and you'll see. But that's why I have 1,000 shares right now. And so what I'm doing here is I'm waiting on JD to be a home run. I'm already at my goal on the day. I'm already at $1,000 on the day, so that's a good sign. I am in somewhat of a small account over here at CME, and so what I'm trying to do today is, you know, I've made my money for the day. Here's my entry. You know, I may scale out a little bit at the low of the day if it gives it to me, but I'm really just trying to hit a home run with this. This is one of those that I'll get out if it comes back up in here. You know, I'll get out for, you know, a small loss, and I'll just make about 1,000 on the day, but I'm going to let the position go for a potential home run. And I'll tell you why now, right? So what I'll do is I have the day chart up here, right? I keep the day chart, the 5-minute chart always up. I'm going to change this 1-minute chart to a day chart real quick just to show you guys why. Right, so here's the day chart. Now, if you look at this thing, you know, before earnings today, this is our earnings play, I believe. I'm pretty sure it's an earnings play. Yeah, JD, it's an earnings play. You can see it on the scanners. I'm sure that on Andrew's scanners you can see this as well. It's an earnings play. So, you know, before today we were in a very consistent downtrend. We had a little bit of a gap up in here, right? You can see that they probably, insiders knew there was going to be a good earnings day because we had a big white candle for apparently no reason. Maybe it was bouncing off the 200 moving average, right? So this gap up was expected, but again, going to consolidation, right? If you look at this candle, right, you can see that there's a very prominent area of consolidation going all the way back to, you know, April or mid-March, right? So you got this consolidation area in here, and if you really want to get down and dirty on this, right, there's a high from these candles in here, right there, right, and there's a low from these candles here, right, and then there's a high from these candles in here, right? And so I'm thinking, you know, we were down here to you know, before today started, you know, this is a potential channel we could be in, but so is this, right? And so I'm thinking that there's a very possible chance that we could, as a home run type play, come to the lower end of this channel in here. And you can see if you look at the price mark on that, that's about $28. And coincidentally, it lines up with the pre-market low, right? The pre-market low, and if you really look closely at this, this is the previous close line, right? And that's at about 27.51. That would be, I would consider that a home run. So if I go back to the minute chart in here, you can see that the pre-market low is way down there. 1,000 shares to way down there would be a nice, you know, another, you know, what am I at? $29 is my average. 27.80 would be about $1,200. And then if we break down from there, leveraging the day chart one more time, if we ended up pushing through this previous close line, I mean, we could come down to 26.50, 27. Now, I won't hold the entire position that long. Again, I'll probably try to scale out a little bit at the low of the day, which is, you know, right here, right, about 28.30-ish, and then I'll probably get out the rest around that area there, which is the pre-market low. But, you know, another $1,000 would be a very nice day in a small account like this. So anyway, there's the recap, people. Just another way to look at the markets. Again, I think that the foundation that Andrew and the Bear Bull community is providing you is an excellent foundation. I think it's a phenomenal way to learn. I think his book, I have it right here, as a matter of fact. It's probably outdated, to be honest with you, but it's one of the first copies. As a matter of fact, if you go into Amazon and look at the reviews, I think I am the #1 review in Amazon, right? I think I am, to be honest with you, and it's because I normally don't write reviews, but Andrew deserved a good review for writing this book. So, and his community is unlike, not to sell any thing, not to sound like a salesman, because I'm not. If I was, I would have kept my YouTube channel and marketed it, right? Had ads and stuff put on it, but I never did that. I only did it to help. But anyway, I've seen all the free videos out there, and I did consider some of the different chat rooms and different communities. And I'll tell you guys, I think you could probably benefit from other chat rooms, but you're not missing anything, right? I think you could benefit from anything. I think that if you went to school at 50 different universities, you'd probably learn something at 50 different universities. But what I will tell you is that you're not going to learn anything above and beyond what Andrew and the community at Bare Bowl is going to give you, right? And so believe me, I thought about it long and hard many times, and I just decided never to go for it. I actually did buy a small DVD course from somebody, and I think it was like an 8-hour DVD, and I watched about 30 minutes of it, and then I realized, you know what, I don't need this, right? I'm going to be a better trader if I just keep practicing, right, and leveraging the fundamentals, the principles in books like Andrew's, and kind of just start trusting myself as a trader. So anyway, I'm way off topic here. There's the JD trade. I'll just say this real quick on the way out. FGEN was going to be my home run trade, right? And I decided to get out in here because I wanted to use JD instead. I don't know how many shares I had, but that was at about 36.50, and it came down to 34.50. So I could have hit my home run right there. So I'm not an advocate for home runs, but when I'm at my goal on the day and something looks like it could potentially do something like I think JD may do today, right? I think it'll come to the low of the day at a minimum, potentially the pre-market low. That'd be a nice profit to kind of add to this $1,000 day. So anyway, sorry for going over, guys. I know that there's a limit. Hopefully you guys can forgive me. You guys have a great day, and as always, stay green, my friends. Stay green. Talk soon.